Hey everyone, how's it going? Today is December 5th, 2021. The year is slowly but surely coming to an end, and I am back after 2 weeks of traveling to El Salvador, learning all about Bitcoin, the whole country, and I guess everything that's led up to that amazing transformation of making Bitcoin a legal currency. But today we're going to explore what happened in the last 2 weeks, kind of on a more macro level, because obviously in the last few days and weeks, the stock market has had a pretty big correction. A lot of tech stocks have gotten slaughtered. The VIX, the volatility index, is way, way up. And of course, if you were around, Bitcoin crashed pretty dramatically. I guess now it's fallen from about 69,000 to about 42,000, and it's currently hovering around 48,000. So, lots of action, lots of talk and speculation as to why all this stuff is happening. But from my experience, I'm just going to break down my opinions on it and why I don't think it's because of, supply chain this, supply chain that, new variant over here, pills not working, infrastructure bills not getting passed. When it really boils down to the way that the market reacts to things and positions itself, it's so important to pay attention to what the US Federal Reserve is doing. And so in this video, we're going to kind of go over what recent words have been said by the Federal Reserve Chairman, Jerome Powell, and how people might be positioning around the market because of some of the things that he said, and why I think that the ultimate motives for all of this might be a little bit misplaced, and there could be some opportunity in that. Because the market, for sure, I would say, is starting to panic a little bit, and you can kind of see that in the data. So, really quick here, let's switch charts. Just to give you a bit of a glimpse as to how much carnage there was, basically the S&P 500 is down, but if you look at it, not down that much. I would say so far it's a standard fair correction since the March 2020 collapse, and it's the same deal with the QQQ. And as you'll notice here, they haven't really lost higher lows at any point, even now. The last low that was in September is still a good 5-6% drop away for the QQQ. Now we can get there very quickly. So the stock market has dropped, I guess, since March 2020. We've had days where it's dropped 2 to 3% for the entire index. So, if things got really bad on Monday for whatever reason, yeah, we could start testing support. But so far, I don't see a lot of reason to panic. Another reason that I don't think that we'll see continued drops for the next little bit, and why I think in the next week we'll have a bit of relief in terms of every market, is just seeing where the VIX is. And if you look at the VIX here, we've had a lot of lower highs, we've broken them, but generally the VIX has not been able to maintain momentum above 30 for very long. And the VIX essentially, for those who don't know, it has a range of 0 to 100, and it measures market volatility, how many people are hedging with things like puts, and it basically just assesses, I guess, fear in the market. And so obviously in the last little bit, you can see that we've had the most fear that we've had in about a year. I think we hit 37 on the VIX in January 2021, and we hit about 35 the other day. So beyond that, the only times that we've been over that since the COVID initial panic was twice in 2020. So yeah, there's a bit of fear in the market, but overall the structure is not broken yet. This is a very well-maintained uptrend and channel in the general markets. Now, cryptocurrency, on the other hand, is a little bit different. What we saw in Bitcoin is Bitcoin managed to break out to a higher high after this big correction in May. And now we're seeing that, once the ETF got approved for the futures contracts, we've had a bit of a pullback here, and Bitcoin has not really risen too much, although there has been a lot of action in some of the other coins, specifically Ethereum, which has been a lot stronger than the other ones. But instead of spending all day analyzing technical analysis, I want to give you kind of a worldview perspective of where I think the markets are currently. And I've kind of prepared a bit of thoughts here, and I'll kind of read them and discuss them as I go through the bullet points. But yeah, essentially what we have is we have cryptocurrencies down 25, 40, 50%, depending on which one that you're looking at, from all-time highs. SPY and QQQ down a little bit. These are the major technology and stock indexes that everyone uses to measure, I guess, the strength of the stock market. And VIX at pretty high levels. The dollar also, it's been strong in the last few weeks, nothing crazy. But why could all this be happening? So, one of them is we have a lot of fear about inflation. And you would think naturally the gut reaction would be like, wait, if people think that inflation is going to get worse, why are people dumping stocks? Why wouldn't you actually just buy more stocks? Like, what are you going to buy when inflation hits? You're certainly not going to buy the dollar. You buy anything else. And so the idea is not that, you should be afraid of inflation as an event to dump stocks, but you should be afraid of what the Federal Reserve might do in reaction to this. And that's basically where everyone's at, is we've seen inflation now rise to about 6%, which is really significant if you think about it, because that is the highest level ever recorded in the last 30 plus years. And the way that I like to think of it is it's actually the highest level ever recorded since the birth of the internet. So since the dawn of the internet, of the web, of all of the technologies we talk about on this show, every week or so, we've had the highest inflation ever. And that's what those are the numbers that they tell you. So CPI is measuring, the cost of food and commodities. It's not measuring, the cost of a house necessarily, or a Netflix subscription and things like that. It's just about really basic assets, food, cars, transportation services, medical care services, etc. So we've seen that go up a lot, 6.2%, and people are thinking, great, the Fed now has permission to taper their bond purchases. They've been purchasing government bonds in order to create new money through a process called quantitative easing. And so now they're saying, well, the economy is doing well. Maybe we don't need to do all these bond purchases, and we're going to start tapering off a little bit. And so the next part that comes from that is when inflation starts to get out of control, typically the Federal Reserve raises the rates. And so what that causes people to do is kind of lower their investment into the economy a little bit. They're not throwing money at every single new startup, because they're able to get kind of these guaranteed yields off of bonds and other investment grade products like mutual funds, because the rates are a little bit higher. So people are paying a bit more interest. If, let's just say, you're getting 3 to 4% on your money, maybe you don't put all of it on a speculative investment. Maybe you put 30 or 40% on that mutual fund. And the thing that people underestimate about all this is that the market for bonds and these fixed income products is actually a whole lot larger than the stock market. The cryptocurrency market, for example, is about $3 trillion. So, it's pretty big. That's about, I think, 10 times bigger than it was this point last year. I could be wrong, maybe about 5 times. And then you look at all of the stocks in the US, and this doesn't include private equity, but it's a good picture of it. It's about $100 trillion. So if you take the value of every single publicly traded stock in the US, it's about $100 trillion, give or take. And then when you start to look at government bonds, and these are global all over the world, these are, sovereign debt bonds. These are bonds issued by corporations. These are mutual funds. It's about $400 trillion. So if you get even a little bit of a rate hike, you start seeing a lot more capital flow into these bond products, because they are just this gigantic beast, and it's a part of every pension portfolio. Companies hold bonds, banks hold bonds. Everyone in some way or another has exposure to these fixed income products, and they are of varying risk, but the facts to know are that, again, they're so much bigger than the value of the equity market. And I think even the real estate market, I think the entire value of real estate globally is about $250 trillion. So if you think of bonds and bond-like products, they're the biggest things that we have in basically any asset class ever. So why are people freaking out in the market? Well, number one, every single word that the Federal Reserve Chairman says, Jerome Powell, is monitored and scrutinized. So he came out, and for months and months and months, they've been saying inflation is transitory. It's temporary. It's this thing that might spike in the short, medium term, but is going to go back to the levels that we've historically maintained. And if we look at the chart, they have done a pretty smack-on job of pretty much maintaining it in this range of 2 to 4% for the last 40 years or so. And now we're starting to kind of break out of that median line and go a bit higher. So they've been saying we have this under control. A lot of the Bitcoiners have been saying nonsense. We're going to enter a hyperinflationary world. And I don't think either of those takes are correct. What I basically see is that it's lasting a bit longer than they thought they would so far. So Powell even came out and he said inflation is, let's just stop using the word transitory. And so what that has led a lot of people to believe is that essentially, okay, once they're done tapering, the next logical step, if inflation is not transitory and it keeps at 6 or 7 or whatever percent, they're going to start to raise rates. And that's why you're seeing a lot of these high beta tech stocks, these things that don't have any yield, get hurt the most. And that's basically the spectrum that we're on, is you have these super highly speculative technology companies that don't pay dividends, that have, maybe by another metric, absurd valuations. And you could also lump biotechnology stocks in there as well. And you have anything that's just really speculative and isn't based on some type of, I guess, intrinsic value, something that is just bloated a lot because of monetary premium or speculative value. Those things get hurt the most when people have these fears of rate hikes going up. And the things that tend to do a little bit better are these safer picks. Food companies, for example, actually benefit during inflation because their earnings are going up. They can raise their prices as the cost of manufacturing these goods go up as well. So those safe haven stocks now have become, in the last few weeks, to look a little bit more attractive. The other thing to realize too is that if rates go up, capital is more expensive to borrow for growth companies. And that also means that these companies might just not invest in creating new products or services necessarily. And that's kind of what the Fed wants, is when they raise rates because inflation is running hot, the expectation is that they're going to be able to cool down the economy just enough, not to create a panic, but just enough to kind of take some of the frenzy out. Yeah, I think that's kind of an overview of probably where some of the thought is behind the recent market dumping and Bitcoin and all that. And of course, how crypto plays into this, obviously, is you have Bitcoin and then every other cryptocurrency is like a more volatile version of it. So usually every other cryptocurrency, if Bitcoin drops, will drop harder. And then if Bitcoin bounces, maybe they'll outperform it to the upside. And yeah, some outperform Bitcoin, some don't, but their moves are definitely more violent as they're seen as more speculative than Bitcoin, which is a much bigger asset that has kind of been around the longest and is the most proven. So next, let's talk about the Omicron variant of this thing that's been going on for 2 years that people have been taking things about. I won't say it by name, but I think I can say Omicron without getting banned. Basically, I think a lot of the consensus of the market moving forward with Omicron has been that it is going to be a virulent version of what we've had in the past. It's probably going to spread and everyone's going to get it, or interact with it in some way, but it's not as lethal. And that's the most important part, because essentially people can justify not shutting down the economy if something like that is not going to be lethal. If the death rate is much lower on it, people will continue to say, look, take your vaccines, wear your masks, keep doing what we've been doing for the last 8, 10, 12 months. Maybe a few restrictions when it comes to travel from countries where it's kind of dominant, as they want to not overwhelm the healthcare system potentially. But signs have been pointing that this is a much less dangerous strain. So I don't think this is the black swan event that some people are making out to be the reason for this collapse. Again, I think it's a lot more related to the Fed and some of the things that Jerome Powell has said. And so another thing I wanted to kind of talk about here is we haven't had rate raises in quite a long time. So the last time the rates were kind of raised on this steady path that was kind of set in place was in 2018. And the last time that happened, stocks dived really hard. So 2018 was one of the worst years for the stock market. The Dow Jones lost about 10% of its value. S&P 500, same thing. NASDAQ dropped roughly 8%. And almost all of this was contained within a 3-month period from September to December 2018. As the rates were kind of being lifted, stocks dropped mostly, anywhere between 10 to 40%. I remember back in 2018, Apple stock went from, it dropped about 40% from the previous all-time high in 2018 to about December 2018. So really, really brutal time for stocks during then. There was no Santa Claus rally. And again, a lot of that was on the fears that rate raises are coming. Money's going to rotate back into bonds and safer assets, and we don't need to own as much stock exposure as we previously had. It was also a pretty bad time for cryptocurrencies as well. So you can see that a lot of these things move in tandem. That's why I like to talk about the Federal Reserve picture at large, as it gives you kind of an idea of the whole market. What happened subsequently after that, though, is that the Federal Reserve decided to kind of reverse course. And I think a lot of this was, and it's hard to place a concrete reason, but I think a lot of it was from the scrutiny of people who had been invested in the stock market. I think basically the consensus is that Jerome Powell made a mistake. He pirouetted and he did a 180, and essentially from that point on, they said no more rate raises. In fact, later into the next year, 2019, they even lowered rates. So rates were on their way down before COVID, actually, in kind of this big turn. And so there was no big event, unemployment didn't spike or did spike or didn't spike, there was no big shift in December 2018 in the economy to warrant this change of policy. It was purely a sentiment-driven thing, and it was just like a change of course of how the Fed was going to do things. So I think, in my humble opinion, I think that that event spooked the Federal Reserve, and they saw all of this value being lost in the equities market, and they've got a lot of pushback because, again, a lot of these people own stocks and indexes, and politicians own all these things, and the top, 10% all have portfolios. And so when this is diving like this, and people say, look, well, we don't need to be raising rates right now, the economy's not overheating, maybe change course. It seems that the Federal Reserve chairman, like all human beings, are subject to mistakes and manipulation. And so I think because of what they were seeing with the stock market, they reversed course. Just my opinion on the matter. So when I think about what's going on with the stock market now, where essentially it's been ripping like crazy, the standards are sky high for returns. It's been 20% plus years in a row back to back. I don't think the Federal Reserve is too worried about raising rates. But on the other hand, they don't want to be the ones who take credit for tanking the stock market. They don't want to raise rates. It's a good thing to have a hot economy rather than a cold economy. So they're going to raise rates as much as they can before they start seeing it affect the market, in my opinion. And I don't know when they're going to raise rates, but the other big factor involved with this is essentially that when you start to raise rates, you start to implicate a lot of other people that have leveraged a lot of debt into problematic areas. So let's just say you're the government, for example, and you have a whole bunch of debt that you've issued and you got to pay interest back to the Federal Reserve or back to the bondholders. When you start to raise rates, the return goes higher and your debt payments are higher. And so if you raise the rates, 0.25% or 1% or 2%, sure, maybe not the worst thing in the world, but in terms of the actual debt payment you have to make, it's a lot bigger. And that goes for mortgages as well. So especially since we've had a year where we've had a mega housing boom, a lot of people have bought new houses, likely have bought some of it with debt or mortgages. They've locked in their rates maybe for 1, 2, 3, 5 years. But when you start to raise rates, that's, it becomes a little bit of a conundrum for the people who have taken out a lot of debt as well. So another thing to really think about as well is that while, we might be entering this stage where rates might go up and it might impact some of these markets, at some point it will be priced in. There will be some level of predictability to where the rates are going. There's this whole market based around predicting, what is the Federal Reserve going to do? Another thing to kind of keep track on too is that, from 2008 to now, the interest rates, the federal funds rate has never really gone above 2.5%. So we've had rate raises in between, after the Great Recession. But again, they never really got too far. And especially when they started to go up in 2018 is really when the market freaked out. And, it's a different situation now. We have a lot more inflation than we did back in 2018, or the numbers say that we do. But the market, you don't want to send it into a frenzy. And so this whole idea of we're going to raise rates, on a curve throughout like 2 years or so, I don't think that's going to be how the Federal Reserve approaches it this time around. I think they're going to have like a wait and see mode, and they're going to see, can we bring this inflation down, or will it just come down on its own because of supply chain issues clearing up, which they say is the real contributing factor to the CPI going up. But yeah, just really important to know that the preference is not to raise rates because, again, we know and we've just seen the reactions time and time again. You start doing it, people start dumping equities. And so many people in the government hold equities, and there's so much government debt that starts to get more expensive as you raise rates as well. So the preference would be to keep it at zero forever if it didn't mean that inflation could creep in. But they do it as a protective measure against inflation. So... And the thing is like at the end of the day, all of this stuff is just a number that they come up with. CPI used to be something pretty drastically different in the 70s, and they've changed the definitions of it over time. They haven't accounted for, the way that some people spend, I think, today on things. They haven't really taken into effect rental costs that well. So I don't know. As long as their number is saying that we're going up, though, that's what they're going to base their decisions on. But they'll conveniently ignore everything else that's being affected by inflation otherwise. So, yeah, in my opinion, it's all a balancing act. And this is my prediction. So, right now, can't see where we have it here. Right now, we have inflation at about 6%. And so basically, throughout 2021 after May, it's been persistently over 5%. My prediction is if CPI falls under 5% for 2 consecutive months before June of 2022, which is when they're expected to make their decision and announcement regarding how they're going to do rates for the next few years, if CPI inflation can do 2 consecutive months under 5%, so we're talking 4.9 or lower, I don't think they're going to be in a rush to raise rates, and I don't think that we'd see rate raises into deep 2023. So for me, that's going to be the number that I look out for the next few months. I expect inflation to probably continue rising November, December of this year. But I think after the holiday season, I think we're going to get some clearance with new port developments and things like that that might clear up the supply chain issues that they're blaming this on. And if those numbers go under 5%, I think the Fed will come and say, look, 5%, it's a little higher than we think, but I don't think we need to raise rates at this point, or we don't have to do it in this rushed fashion. So that's just my prediction. And another thing to really think about too is, the market is going to like at some point some of the chaos, because the chaos going on with inflation and monetary policy is really good for the party that is in the minority right now, which is the Republicans. And of course, these election things can change very quickly. We're still almost a full year away from the midterms. But I think rampant inflation is a really good thing to run on in terms of taking over the House. And right now, the polls are heavily leaned towards Republicans taking over the House. If they manage to do that, they essentially make Biden a lame duck. There's a possibility they take over the Senate as well. So you have a Republican Congress and a Republican Senate. Biden's going to have, an impossible time getting any one of his big bills through. And that's good for the market. The market really likes gridlock, unfortunately, but it's the way it is. Overall, here are my thoughts. I think that all of this information is being told in different ways by different people. And I'm just one of them, and I've only started talking about the Federal Reserve and doing these little live shows every once in a while. But I think we're going through a big monetary awakening where everyone, because of inflation, is forced to learn about how money is created and how monetary policy works. And, whether it's through memes on TikTok or some film student rambling about it on YouTube, or an actual economist who knows what they're doing, a Keynesian or an Austrian economist, everyone is finding where they stand relative to how they perceive how the value of money is held and preserved. And a lot of people use this term orange pill in the Bitcoin community, where you start learning about Bitcoin and you learn all about the fiat system and how money is backed by violence and a lot of the stuff, again, that I've yapped about on this show. People are finding themselves taking positions on monetary policy, and it's not necessarily a political issue like, maybe mask mandates or, cards for whatever and, gun rights and stuff. It's not a political issue, I don't think. But it is an issue of morality, and it's an issue in the way that you see centralization versus decentralization. So I think a lot of people are finding themselves going down the monetary, education rabbit hole. And I think that people are coming to their own conclusions on how to best handle their finances. I've gotten so many people messaging me this year that are friends and family who don't usually watch my show, but have said, I'm going to tune in. People from high school just saying, look, I don't know what to do with my money, but I sure as hell don't want to keep it in a savings account. And so now more than ever, and this is why I mentioned that this is the highest period of inflation we've ever had during the dawn of the internet, people are going and educating themselves and figuring out what this means to them. We have so much information available on this. We have so much history that we can just get to with the click of a button. And so now everyone can kind of make their own decisions about how they view monetary policy, how much they want to be in an asset or any assets versus how much they want to keep in savings. And ultimately, if inflation continues to persist, people will lose faith in just holding currencies for the long run. It also makes planning, savings, whether it's buying a house or whatever, really difficult for people. Because if the cost of housing is rising at 20% a year and your plan was initially, I'm just going to store everything in the bank in cash for a down payment, that's not going to work anymore. And you might throw that plan out the window and just invest in something else entirely. And we see this happen all the time. We see meme assets now, like the meme stocks and meme coins. In my opinion, the only reason that these assets have grown is because the value of money this year has been perverted so much. It makes no difference whether you're investing in Doggy Coin or Apple or the S&P 500 at this point. And at least dog money trades 24/7, so you're able to kind of get in and out of it without having to worry about the weekends, right? So, yeah, just my thought. Money has been perverted. More people are, I guess, awakening themselves to the value of money and how it's created, and that leads them to Bitcoin, that leads them to other assets, maybe gold. But people are waking up, and I think eventually it becomes not political in the sense of like left or right, but it becomes an issue that has to be addressed by politicians, or else they get kicked out. And it doesn't matter if you align with everything that Republican says. If you're sick of inflation and you see a party that is just relentlessly spending, you either don't vote or you vote for the other guy. So just my take. Change in thoughts that I have. Despite all this inflation with the US dollar, I don't think the US dollar is going to collapse. I think that a lot of other currencies will. You've seen the Turkish lira lose like 60% of its value in the last week or two to the US dollar, and a lot of these other currencies are going through immense hyperinflation because governments are printing it out to pay for stimulus programs, things are shut down, and productivity in some of these foreign countries is just not what is needed to pay for certain things through tax dollars. So money has to be debased, and what happens with that is the yields for the bonds go up as the risk of defaulting, these countries defaulting, goes up, and that also tanks the currencies as well. In my opinion, whatever the US dollar is doing inflation-wise sucks, but every other country is doing nominally worse. So that still makes the US dollar very attractive for all of the other 7+ billion people around the world. In my opinion, many countries in the next 10 years are going to dollarize, similar to how I was just in El Salvador. They have the US dollar. They got rid of their national currency in 2001. Panama was one of the first countries to also, go full dollar. And there's a lot of other countries in the world that just use the US dollar. They don't get to have their own Federal Reserve and currency to print and call their own. I think a lot of other countries are going to move to this model, or they're going to move to the euro. And if you have hyperinflation and you're not the reserve currency, investment will just leave your country because people don't want to have their denominations or their T-bills paid in a useless currency as well. This money that I think is going to come out of a lot of these countries is going to come out in the form of bonds. So I think there's a lot of terribly yielding bonds in countries that have collapsing currencies. That money needs a new home, and that money's not just going to stay in US dollars forever because, well, that's a little bit silly too. So I think a lot of it ends up flowing into Bitcoin. I think a lot of it flows into other bonds in the US. And I also think that it flows into the equity market into the US as well. People will say, look, I was supposed to have, 10, 30% in emerging markets, but all their currencies are collapsing. I got to find a different place for it. Let's go with the tried and true recipe. And I also think that within a year, we're going to see that people living under high inflation regimes are going to look at El Salvador and the Bitcoin experiment there to see whether or not it's panned out for those citizens. We're going to have a lot more data after a year on how many people are spending it, how many people are saving it in El Salvador. And we're going to see, whatever the price of Bitcoin is, whether it's a success or not. And like I say with these things, nobody wants to be the first, but nobody wants to be the last either. So how do you position yourself? Well, I'll open that question up to you guys, but these are just my pieces of advice. Whenever you're worried about the markets, or you think you haven't gone deep enough, you're not bullish enough, or if you think things are too bearish out there, I always say, look, try and keep 15-20% of your net worth in some type of liquid asset, preferably cash if possible. And that means that 20% is not going to appreciate maybe over a year, but it'll let you go in and out of opportunities in the short term as you see them. And if everything else you have is in appreciating assets, then that little anchor of having cash is not going to be a big deal. But it really helps you relieve stress. So I'm curious if that's everyone's ratio, 15 to 20%. But again, I always try in my crypto portfolio and my stock portfolio, 15 to 20% cash at all times. Only deploy it if you feel like you see a once-in-a-lifetime deal, or if you have a short-term trade with really defined risk and really defined reward. The other thing I would like to point to a lot of people is I'm noticing a lot of people bet the home on cryptocurrencies or stocks. Keep 3 to 5 months of living expenses, and do that because it makes sense, but do it also because it'll just make you think better. You're not going to be taking risks, and you're not going to be panicking when things dump, because you're going to know that your needs are taken care of for the next few months. And also, it's just good to have a source of income as well. If you're trading only for your source of income, sometimes now, like I am, things can get a little bit freaky when you take a loss. And so, have that other income, but also have that safety net for yourself as well, so you're not making bad decisions because you're worried about the digits going up and down. And if you're new, in my opinion, I would say do not trade for income, trade to grow wealth. And that also means just invest long term in things. So I would say stick away from trading unless you see really good, clear opportunities. And what I would say is you're not a trader if you're buying something without knowing your downside risk and your exit strategy. If you are buying and you're saying, I'm going to buy this here because I think it's going to $5, I think I'm buying Cardano at 150 because it's going to 5. If you don't define where you dump that Cardano ahead of time, you're not a trader, you're a gambler. So if you're not defining your risk on both ends of the spectrum, I think you're a gambler. That's all. But yeah, all right. Let's see a couple rapid news things here, and then we'll get into talking with you guys, and I'll share some short-term trades. And if you guys have any requests for things that you'd like to have me cover, we'll go over it on the show live right now. Number one is Pokemon Go is launching a Bitcoin metaverse. They're teaming up with a cashback program called Fold, and they're essentially making games where you can play and win Bitcoin. So I would check that out. It's got all the buzzwords: Bitcoin, metaverse, AR, play to earn. Check that out. But I think a lot of that stuff's going to be the future. I think people are always searching for a new way to make games more addictive, and I think actually being able to pay people in a currency is going to be a really good way of doing it. Mind you, the regulations around that to make it not be gambling are going to be tough to skirt around, but yeah, these play to earn things, I'm doing a lot more research into them because I think they're getting more popular by the day. The creator of Silk Road, if you don't know, that was the big drug enterprise that Bitcoin was well known for back in 2015. The creator of Silk Road, who has been imprisoned, Ross Ulbricht, is launching an NFT, and I think it's up to 700th bid for one of them. But he's using all the proceeds to help prisoners and families who want to create art and kind of get it out there. So all of this is for charity. That's kind of cool. I'm curious if anyone has opinions on Ross Ulbricht's imprisonment and all that. I think his sentence was definitely too harsh, and I think there was a bit of a setup involved with that for sure. Diddy, and this is something too I wanted to talk about. Liquidity is so important. So when things dive, it means that there's a lot of people liquidated on the way down. And so part of the reason I think that Bitcoin fell so hard is because some people are out of that game now permanently. They got their entire accounts liquidated, and so billions of dollars has to come in, I think, to fill that void of new capital, or else the cryptocurrency markets cannot go back up to the top. And in my opinion, they will. They'll go back up. But again, when these liquidations happen, some of this money is just destroyed forever. You don't get to hodl when you get margin called. So Diddy, which is a Chinese Uber ride-sharing app, is delisting from the New York Stock Exchange after dropping about 70% from its IPO. So this thing lists, I think, a few months or maybe a year ago. Just plummets for months. And then now they've just said, you know what, we're not going to stay on the New York Stock Exchange. It's too much of a hassle, and we're getting bugged by China maybe. And so they voluntarily just taken this stock off the stock market. And now, if you own shares, you own them on the Hong Kong Stock Exchange. I believe they're moving to. But again, no liquidity is bad. And so what I would say is, I know a lot of people here who want to buy Alibaba, Neo, some of these stocks. That's great, but know again that your risk is so high with these, because if they get delisted, it's so hard for them to ever go back to those highs. So if your plan is to buy these things for continued upside, I'd be very, very careful. So I'm not buying Baba here because I think it's going to make a new all-time high anytime soon. I'm not buying Neo here because I think it's going to go to $100 or $200. I'd buy these stocks for a short-term trade, but I'd be so careful with any of these long-term, because when their listings get pulled, I don't think they test those highs ever again. Those valuations that they've accrued are because they're on the American stock exchanges. Another interesting thing, we've talked about this on the show, is to avoid the Bitcoin futures ETF if you want Bitcoin exposure. But now, after a month or maybe a month and a half, we now have proof that the Bitcoin futures ETF is garbage. Raised over $1 billion in 2 days, the fastest ETF to ever hit that mark. Now it's down 19% since launching versus a 9% decline for Bitcoin in the same time period. What's the difference? Contango, where Bitcoin futures price is higher than spot, causing a negative roll yield. So look, in only a month, the Bitcoin futures ETF has underperformed Bitcoin by about 10%, which is pretty bad. Um, Moving on from there, oh, I don't have the article for this, but I'll just mention it verbally. Grayscale, which owns GBTC, which we'll talk about, it's one of my top picks for an investment. They bought 3% of the remaining supply of Zcash, which is this privacy-focused cryptocurrency that has also been endorsed multiple times by Edward Snowden. So a lot of smart people like this cryptocurrency. It basically hides the transaction info from the sender and maybe the receiver. So good for all your dirty purchases, but some people just value the privacy for the sake of having privacy. So yeah, they bought 3% of the supply of that. To me, that is a good sign, because what that tells me is that a company would not spend X million dollars worth if they thought that imminently these privacy coins were going to get banned in the US for investment. So, I haven't checked out the Zcash chart, but that would give me some relief knowing that Grayscale has bought this much, just seeing how they are, one of the biggest holders of cryptocurrency in the world. And they're basically saying, yeah, we're cool holding it and cool having it trade on the public market. And then lastly, in not so fun news, debt collectors can now DM, email you, and text you about unpaid bills. So that brings a new meaning to left on red. But yeah, that is everything. And now we're going to hop to the chat and see what you guys are talking about, take some requests, and I'll share maybe at the end some of the trades that I am looking for this week in the markets. All right. Hey, back at it. Yes, we're back from El Salvador. I didn't get a tan because I was wearing 50 FPS sunscreen all day. But yeah, it was sweet. The next few months are me basically just editing that whole documentary together. And I'll share some more on the live stream about the whole experience. But, one of the things that I found is just, I don't think you can have an appreciation for Bitcoin unless you actually go and spend it. My respect and my mind was opened up so much by the potential and the use of the Lightning Network. And so basically, if you don't know what that is, Bitcoin processes batches of 2,000 transactions or so every 10 minutes, right? And if you want to have a global currency, 2,000 transactions every 10 minutes is just not enough, right? Like, you have to be able to have a lot more. So what people have done is they've built this thing called the Lightning Network. And essentially, the Lightning Network lets you set up like a peer-to-peer record so that you can send Bitcoin back and forth, and it's all legitimate and the two parties agree on it. And then at the end of the day or the end of the month or whatever, then you can settle those transactions for Bitcoin on the regular Bitcoin network. But the advantage of the Lightning Network is you can send Bitcoin instantly, party to party. There's zero fees, basically. I think I paid, one Satoshi, which is like 1/100th of a penny, to buy McDonald's. And you can settle these transactions instantly. Like you set it from your phone, QR code, 5 seconds, boom, your thing is paid for. And if you think about that, it sounds cool. It's like, okay, it's a cool way to send money. Maybe I have my little e-transfer thing. I can do the same thing here in Canada. The Lightning Network can be used by anyone, anywhere across the world, and there's no delay based on that. And it's interoperable with basically just a phone and an internet connection. So what that means is essentially you can send money anywhere for no fees and no traction, and no one can stop it. And you can settle it for real Bitcoin. And you can use that technology to not only send Bitcoin, but actual dollars as well, because at the end, it's just a communication network. So what does this all mean? Why am I so fucking jazzed up about it? I'll tell you why. Because number one, it takes the burden of paying commission and fees from the merchant. And so right now in El Salvador, because Bitcoin is a legal tender, they're not paying capital gains if it goes up in dollar terms. But what they get is when people pay in Bitcoin, they don't have to pay anything to a credit card processor. They get their cash at the end of the day. You can send as many of these transactions as you want. People are building applications where you can essentially send dollars every 5 minutes to a content creator, and you're not going to clog up any sort of network. You can't do that on the Visa network. You cannot do that on the MasterCard network. I could stream someone 10 cents a minute or 10 cents a second to pay for something, and then as soon as they're done talking, I cut the stream off. You can stream money, and that's really cool. And you can do all sorts of other things because the settlements are instant. When I was in El Salvador, we went to a convention and they actually built a prototype of this machine where you could put in a plastic bottle or an aluminum can and it would send Bitcoin, maybe only 5 or 10 cents, immediately to your wallet. So you can send really tiny fractions of money and there's no cost. And you cannot do that. I can't send somebody 50 cents with Visa because the fees just to send that are, 50% of the transaction cost. So it opens up this whole world of micropayments and little applications that you can do with that. We also met someone who made this machine where you can just put in spare change and it'll send you satoshis onto your wallet. So I had a pocket full of dimes and nickels from dealing with dollars down there. I put them into this machine and he sent me the Bitcoin value instantly. And yeah, that's really cool. That's why I get jazzed up about Lightning. I don't know why I started talking about Lightning so much, but yeah, streaming money is really cool. That was my big takeaway from El Salvador, and that's why I'm so excited about the future of Bitcoin, because people, as this becomes a regulated currency around, yay for the Satoshi machine. Oh, is this Edgar here? There we go. As people create these, I guess, new apps for how we transact with money, I think it's going to open up a lot of economic innovation. And the countries that have legalized it as legal tender are going to be the beneficiaries of all the entrepreneurs who want to build these things because they don't have to worry about, taxing every transaction and all this because it's just a currency down there. So yeah, awesome. Edgar's in the chat. Fires my flag. That is fantastic. But yeah, let's just look briefly here at the chart of Bitcoin because a lot of people are seeing, oh no, we've got one of those infamous double tops. What if that's the market top? What I will say is, from my experience, I've never seen a market like cryptocurrency top out like this. It has been parabolic blow-off tops every time, and so there might be a reason that the market is not looking like this as much if this is the top. Part of the reason is there's a lot of altcoins, and now people are saying, well, I can't afford Bitcoin. It's 50,000 a coin. I'm going to trade altcoins. And so you're seeing these blow-off tops in the altcoins a lot more than you are in Bitcoin. So the market might have just matured a little bit. And the other reason for this too is just we're in a different land. We have all these futures and products and different ways of transacting with Bitcoin that we didn't have in 2017. So, the market structure changes a little bit when you have all those derivatives in the market. Am I worried about the price of Bitcoin? No, because I like to denominate most of my life in Bitcoin. If the price of Bitcoin is going down, that's opportunity to convert some of the cash that I'm getting paid for whatever business I'm in into more Bitcoin, which is pretty sweet. And I know that not everyone's going to look at it like that, but if you dig down the rabbit hole deep enough, and I will try and make more content that will maybe make you rethink the way that you approach money. But if you start thinking of it like that and an opportunity every time these things dip, and if you don't look at every time it blows off as a market bubble, and you just look at it like this is the bumpy road to the next universal currency or the next universal store of value, then everything is an opportunity. So I buy high, I buy low, I don't worry about it. But for those who are in technical analysis, I would say essentially, if Bitcoin holds this bottom at 40, 42, depending on what exchange you're on, and I think it will for the next few weeks unless something terrible happens in the market this week, we should be good. And then if that level breaks, you got 39.5, which is the September low. If those levels break, I think we will not see a new Bitcoin all-time high for 6 months to a year plus. I think as soon as those levels break, what can happen is this can stay pretty range bound for months. So it can just tighten up similar to how it did in 2019 or 2018. You can't even see the chart here because it's so tiny. But if you look at 2018, 2020, we were just range bound for months. So yeah, I would say danger level is 39.5. You don't want to see it go below that. And I would say for it to reclaim its former glory, we really want to see Bitcoin go above 61K. That would tell me, okay, new all-time highs are in the books, and we're good to go on this asset. SPY, QQQ, same deal. I just don't want to see it break support. It could go range bound. It could be a bear market, but they look a lot better than Bitcoin in some ways on the weekly charts. Some of my top picks, I'll run through these really quick, and it's something where I'm not going to recommend entry, exit, or whatever. These are just the things that stand out to me and fit with some of my style. I think Adobe is always a buy. If you look at Adobe, it just reminds me of SPY, where it's just like if you just buy the dips, you're good to go. I don't like to bet the farm on these things because they're individual stocks, but I like to buy them, slowly and surely on these dips. And sometimes what I do is I like to buy call options out for 3 months or so because they're a lot cheaper. The downside is capped, the upside is a lot higher. So if you buy a $600 call for Adobe and you buy it for, March, or you buy it for May of next year, the odds are that if we get a little bit of a bounce, you're going to have it double or triple versus just losing the entire value if it just goes down forever. So I like to define risk to reward on call options on these kind of weekly dips. I've done those before. Adobe's a solid stock because they just keep growing. There's more content creators every single day in this economy. It's a subscription-based service. The valuation might change, but it's a solid business, and you can see the market has just loved to slurp up this stock on every dip that it can get. Roblox, also one that's interesting to watch. I'm watching to see if we get any more panic. The $100 psychological level on this, as this is a metaverse name. This is a company that's been around for a very long time, but it's just steadily grown its users, and children really seem to love this platform. They're bringing in all sorts of mechanics. The average amount that a user spends is going up every single year, and 47 million people play this game every single day. So yeah, I like this on a dip. It got a little ahead of itself, I think, in the last few weeks, but we've dropped a bit. I like it for a deal. Matic. So I'm not super big into other cryptocurrencies that are not Bitcoin and Ethereum. I dabble with them, Solana, AVAX, and all that. But one of the reasons that I'm kind of looking into Matic is because I still think it's going to be a while before ETH 2.0 comes out. And it looks like Matic is the long-term scaling solution for Ethereum until that, actually comes out. And there have been rumors, I don't know how true they are, and I know that Matic actually has an event on December 9th, which is in 4 days, that Coinbase is going to use their platform as how they launch their own NFT platform. So they're going to use the Matic network to settle NFT buying and selling. And so I think that's really bullish for Matic. That will legitimize it in the eyes of institutional investors, in my opinion. So yeah, that's something to watch. And the other thing too to note too is like one of the strongest names going into that Bitcoin dump, and I'm finding over and over, is instead of me playing the most oversold names, going into a crash and looking for a bounce in those, I play the strongest things before the dump. So it was Luna this time, Matic was one of them. And sure enough, I mean, you're not going to grab the bottom, but even if you're off by like 10, 20%, this thing bounced 42% in a day. So a lot of good volatility there, and playing those, those more volatile names has worked out. GBTC, really quickly, it's simple. If you believe in Bitcoin long term, you're buying it at a 17% discount. That discount can range between negative 17% to 0% to even positive. But I like looking at this chart because number one, it didn't make a higher high when Bitcoin did, so you can tell the discount keeps getting worse. But number two, in December, at the end of December, the SEC, I believe, has to release a decision whether or not they think it's appropriate to turn GBTC into an ETF. And so they've rejected spot ETFs, but they haven't rejected conversions of trusts into ETFs yet. So if this gets approved as an ETF, automatically you get plus 17%. And then the other end of that too is it's essentially as good as a spot ETF as we're ever going to get, in my opinion, because they hold like 5% of all the Bitcoin or 4% of all the Bitcoin. So if they approve the ETF, you get 17% automatically. You get any positive premium that might accrue. And then if Bitcoin goes up on this news, you get whatever that appreciation is too. So yeah, there's a lot of upside, I think, to GBTC. Again, if you're patient enough, it's the lower risk way of investing in Bitcoin, I think, if you're going to invest it into a long-term stock account. Short-term trades as well. Bitcoin is trading at, what is Bitcoin trading at? Look at BTC Perp. Bitcoin is trading at $49,000 right now. On Friday, it closed at 53, which means there's going to be a gap. And a gap basically means that the next candle is going to open around here, and you're going to see a little gap in the chart between the bottom of that wick and the opening of the next wick. In my opinion, these gaps usually fill, and sometimes they don't fill, but usually what happens is Bitcoin trades all weekend long, and then what happens on Friday night or Sunday night is essentially if Bitcoin ripped ass during the weekend, Sunday night it'll pull back to where it was on Friday, and if Bitcoin just dumped all weekend, it'll pull back, or it'll pull back up to where it was on Friday. I've seen it happen a lot. It's not guaranteed, but it's one of the reasons why I am in a Bitcoin trade right now. I got a little bit of the dump at 44K, but I am not going to sell it until we hit about 51, 52 and close that gap. FPAC, let's just skip this one for now. I'm not actually as keen on this as I was. ARCG, if you like genomic stocks, Kathy Wood, everything that she's talked about has gotten hammered lately. But I like these genomic stocks. So whether or not you believe in Kathy doesn't matter, because it's the underlying holdings that matter, and they might continue to go down because biotech has gotten hit a lot recently. But I look at this ETF and I say, I don't know which genomic company is going to come out ahead, and that's why I really like to invest in these ETFs. Is when I really don't know who the sector leader is in something, I always prefer to invest in whoever's the biggest winner in something. But if I don't know who it is, I invest in the ETFs and get a little bit of everyone. And I don't know, it just seems a little bit cheap to me, weekly oversold. Something where I would just add a little bit every single week into a long 1 to 5 year time span portfolio. And then EOS, opposite side. So I've said play the strongest names before the dump. And I'll say it on the other end, short the weakest names after the dump if you think we're going to go lower. And EOS broke monthly support. It's one of the weakest cryptocurrencies out there. And it's something where it dropped 40% in the last 3 days, and it will continue to drop, in my opinion, as people say, look, there's no support in sight. This thing might be worthless. So, yeah, short the weak boys, play the strong boys, bullish, and that is it. And then let's see chat here. When do you think investors in wealthy countries see Bitcoin competing against second or third investment properties? My shirt. I don't know if you can see it. It says El Salvador. So there you go. When do I see investors in wealthy countries? When do they see Bitcoin competing against second or third investment properties? Well, I think the thing is like, how much is a second or third investment property proportion of your net worth? I really don't know what that's like for people, because I might own like 3 houses and each house is only like 5% of my net worth, or each house is 20% of my net worth. I don't know. But people who are doing those things for investments and aren't using all those houses are doing so because they're looking for inflation hedges. So I would say that I don't know if it competes directly with it. Some people are just more comfortable with land. But what I would say is maybe on the third one, that's when they're like, okay, maybe we do a little bit of Bitcoin instead. The great thing about Bitcoin, and one of the reasons I'm not a big fan of real estate, is while real estate does have cash flows, and that's really nice if you want to generate some income, they have these fixed values. And so unless you have 500,000 or $1 million plus in cash on hand, you can't really buy fractional real estate. You can buy REITs, which are, similar substitutes. But the barrier to entry is really high for most investors. And, if I want to diversify into real estate, even if I'm a millionaire, like that's still, I have $1 million, I put $500,000 into an apartment to get some real estate in my portfolio. That's half my money instantly. So it's hard to diversify into real estate. And then you could also say, well, you can take out a mortgage and all that stuff. And to me, it's just like, that just makes the investment so complicated. When I want to diversify my wealth, it's to protect my wealth. And that means I want to do something I don't have to think about. So I don't know, maybe real estate, I'm making it out to be a lot harder than it is. But I don't know. I think properties for living on. And I also think another thing too to really think about is like, do you ever really own real estate? It's like you have to pay the government every single month, or else they can basically just seize it from you, or every single year, and they can just seize it for you. And then if you are buying an apartment, you got to pay a strata every month, or else they can seize it from you, right? Or they can place a lien or whatever. So it's like with real estate, you never really own it. And that's what I love about Bitcoin, is because I own it. No one can take it away from me. No one can seize it. It's up in my noggin. And stocks, similar deal too, where they can dilute stocks. If companies don't have a track record of doing that, you're pretty good. But I like being able to actually own things. And so, yeah, I get the appeal of the gold bugs too, because you get to own the gold bars. You're good to go. So yeah, Bitcoin's a very different asset. I think people who have 3 investment properties are pretty real estate savvy, and I think it's a completely different wormhole to own investment properties and then also understand or be interested in sound money and invest in that, or just see Bitcoin as an inflation hedge. Maybe not sound money. Who knows? I don't know if that answers your question, Albert, but yeah. I think everyone will just have some Bitcoin at some point. I just don't think it's that complicated. Like it's something where right now hedge funds and pension funds can't get access to it so easily because, buying it on an exchange, how does that work? Cost basis, taxes. Maybe they buy the ETF, maybe they buy the miners, but it's not clear cut and simple yet. And when a spot ETF comes out or when GBTC becomes an ETF, it'll become pretty simple. So you'll see a lot more funds flow in the easier that it gets to invest in Bitcoin. But individuals, it's so easy. And I feel at this point that it's not going to be long before basically anybody who has stocks, if 50% of all Americans have stocks, I don't see why 50% of Americans wouldn't have Bitcoin in the next 5 years as well. And that actually makes it, better. That's a more egalitarian investment. I think at some point for sure, I'll make a call. In 5 years, I think more Americans will have exposure to Bitcoin than they will to stocks in the stock market. That's my prediction with it. Maybe I can open that up to cryptocurrencies in general. So I think the prevalence of an individual owning a cryptocurrency will be much higher than an individual owning a stock in the US in the next 5 years. Thoughts on USDT or Tether concerns will shake out. I stay away from it as much as possible, but a large part of the crypto market trades on USDT. So I've always been skeptical of Tether. I saw the article today that said, they only have 2% of their reserves are in cash and the rest is T-bills or whatever. Here's the thing with Tether is it's been around for so long, and every single cycle this comes up where, oh, it's not backed by anything. It's not auditable and all that. And so for me, it's I can base an opinion off of another person's opinion because, again, all this stuff is conjecture. No one actually has hard evidence of if what they're doing is illegal or if they don't actually have the funds. I can base my opinion off of someone else's opinion. And if I choose to side with the people that have fear, I'm just going off of conjecture as much as I am with the people who actually think this is a valid asset class and a valid coin. And so the people that I respect in the crypto space, Adam Back, he's one of the first pioneers in Bitcoin. He's one of the first developers of it. Samson Mao, who runs Blockstream, they're big on Lightning. The hardcore Bitcoin people, and their tendency is to be hard money above all else. We think the USD is a scam. We don't like altcoins. These guys who are super pro sound money and they're not keen on these centralized scams, they don't see Tether as a threat, and they've actually said, no, I know the people in Tether, it's legit. So I don't know, we all have our biases. I tend to side with the people who are in the Bitcoin space who say Tether is fine, it doesn't pose imminent risk, and if it does, sure, it's $80 billion plus dollars. Maybe that makes up a lot less of the crypto market than you would think now. It used to make up almost 10% of the crypto market. If that falls through, the whole thing's a Ponzi scheme, the whole thing is worthless, then yeah, that's going to hurt the crypto market, but I don't base my decisions based on that. And if anything, it gives Bitcoin more credibility if anything happens to Tether, just because Bitcoin doesn't have to be backed by a centralized party, right? So yeah, I don't know. I don't worry about it. The other thing too to really think about is you can go and you can look up stablecoin dominance charts. And so Binance USD, again, super audited. USDC, super audited in the US. So all that stuff's legit in there. They also do the T-bill thing. They're not keeping it all in cash. They are taking a larger and larger share of the stablecoin market away from Tether, and they're growing at a much faster rate. So at some point, Tether might actually make up less than 50% of all the stablecoins. And so at that point, you got to ask, is this really an imminent threat to the cryptocurrency market? Because it's not even the basis in which a lot of these things trade. What I would like to see is a perpetual futures trading pair that trades against USDC. The problem with USDC is the regulatory aspect for sure. But yeah, I don't know. I think that I don't worry about Tether. So it is what it is. How many friends have I orange pilled so far? Well, there's 9 people on this podcast. I'd say, I don't know how many people are orange pilled in this room, but raise your hand if you denominate your life in Bitcoin. It takes a while to get there. I still worry about the price of Bitcoin every now and then. I try not to think about it. I think the El Salvador thing really changed it for me. I could care less about the price of Bitcoin, even though 70% of my net worth is in it, maybe a bit more at this point. I don't know. I have some cash flow, so that obviously changes, how much I worry about it. But I've just learned so much now that to me it just feels like an inevitability. Up, down, short term, doesn't matter. Nothing fundamentally changes when you hear all the up and down reasons for Bitcoin. But um, I don't know. I don't think my objective is to orange pill everyone, to make everyone drop, their life and just commit to the Church of Satoshi. It's just about educating people about money. I don't think that Bitcoin will be the last form of sound money, and I also don't think it's going to be the last form of money that humanity ever uses. We might come up with a better form of sound money at some point, but as it stands, the immaculate conception of Bitcoin, it's just the best there is right now, and it's doing some things that I think are so important with the way that we perceive value. Having this fixed supply and just being in this space and hearing all these people talk about it, it's just a good place to be right now, I think, mentally. Um, and if anything, I'll just say, like, part of the orange pill is just interacting with some of these people and listening to some of these podcasts and reading some of these books, and not only changing your opinion on money, but how you live your life, and not being in a fiat world where everything is about short-term decision making. One of the things I talked about, and then we'll wrap it up here, is that so many wars are basically of the fiat mindset, where you're basically borrowing from the future to pay for the present. Because no war in human history, no large scale war has been really that affordable. Like, you run out of tax dollars at some point, and you got to borrow or you got to issue debt to create more weapons and to continue the war. Because sometimes neither side has a winner for a really long time. Then you start running out of money and you create more money, and that basically just robs people of the future by creating inflation, right? So much of fiat money, where they can just create out of thin air, or people before fiat money, dollars were based on gold and silver and copper and things like that, but they would still print some out of thin air, and then the debasement would start to happen, and the peg wouldn't be real, and people would lose faith in their governments. So humans cannot be trusted to not debase something over time as they need it. And the thing that is cool about Bitcoin is that it doesn't matter how you feel or how people feel about the need for money to keep protecting something. You can't change that code. You cannot change that code unless you have over 51+% of the network, and you're just never going to get 51% of people to basically just betray the core tenet of Bitcoin. Bitcoin has no value if new supply can be created on a whim by human beings. It goes to zero if they change that, right? So it's cool to have a money where you can't debase it. I think it'll basically just be blatantly obvious if we live in a Bitcoin world that war is just a huge waste of energy and resources. Physical war and sending people, because again, eventually one side just runs out of money, and then great, you win, but if you don't take a land border for yourself, what are you really getting for your money? Nothing. So yeah, is what it is. But if I can just explain money to people, it doesn't have to be about live your life by the Bitcoin way. If I can just explain money and how we've always lived it, and how we have the potential to change thousands of years of paradigms through at least trying out this new form of money, then I will consider my orange pilling well done. But yeah. All right, everyone. That was a long one. This is over an hour now. That's the longest stream I've done. I hope you like it. I hope you learned some stuff. I'll be back on Friday to do the regular scheduled show, and we'll have some more videos coming out from El Salvador hopefully soon. I'll make some little small ones, but we have like a multi-part documentary that will be coming out every single week in January. You guys are not going to want to miss that. You're going to find some really interesting stuff about that country. And yeah, I can't wait to see what you think of it, and yeah, learn along with me. Take care, everyone. I'll see you on Friday.